All right, so let me say hello and welcome everyone to another weekly edition of Stock Market Mutterings. This is for the week beginning on June 24th, where I shall divulge inside of this market and try to extract the fruits of value for you. Because we all know that he who does not economize will have to agonize. Okay, so what do we got here? Let's talk about this market first. I'll give you some of my thoughts and feelings. They could be right, they could be wrong, but let's just go from there. Now, I want to reverse back to last week, and I thought if everything was calm and cool with the Fed, they didn't botch it up by any surprises, that we would probably see all-time highs, especially if we cleared 611 highs, which was roughly like 292 and some change, somewhere in that area. And that's kind of what happened. But it didn't happen the way I thought it would happen. I kind of thought maybe going into the Fed, we'd see a little bit of a conservative nature with some of these plays, or people would just be jockeying for position. However, what we did is got this big gap up on Tuesday that just blew right up over all that types of resistance. And then, of course, into Wednesday, you got some choppy action, which is expected pre-Fed. Then after the Fed, it was just kind of choppy, not really giving you a clean direction. After that, next day, huge gap up and goes right over all-time highs. Now, I would prefer that you would have the opportunity to buy. I'm talking about a day trade, not a swing trade. But if you're day trading, you'd like to buy pre-high and then have it run through the all-time highs and just explode. It kind of sucks a little bit, or it feels to me, if you're a day trader, not a swing trader, but if you're a day trader and you're looking for max value, it sucks when it gaps up over all-time highs. It kind of presses that value. That doesn't mean stocks won't go higher, but oftentimes it does press you for value. But again, it is what it is. We can't change it. You just kind of have to roll with it. And the market stayed pretty solid up until a little bit of fizzle there, as you can see here after Friday. So what are we going to talk about here? What are we going to do? And the first thing I want to talk about or reach out to is the perma bears, or those looking for these massive market corrections. What day is something like this going to happen? And all I can say is this: you can't just sit here and consistently wait on something that, sure, it's going to happen someday, but you can't just wait forever and ever and blow all these great opportunities that are available in the market. The thing I keep talking about over and over again is you're not going to see any sustained sort of bear market or sustained correction until one type of pattern completely leaves this market, in my opinion. And that is this new all-time high stuff. And what I mean is every single time this market gets smoked, 5% correction, 10% correction, 20% correction, flash crash, dump, what is the end result? Within weeks, if not months or weeks, you see an all-time high. So we go back and we talk about flash crashes. We talk about like the election, what happened, big flush. What was the end result? New all-time high. If we just go back to recent history, you go back to October to December, you had probably one of the largest, I can't remember on record, but definitely one of the larger corrections that we've had over the last decade, probably since the financial crisis. I could be wrong on that. I'm just going by my old man memory. Somewhere of a 20%. But what was the end result? I mean, we're already at highs. We made new highs by like March or April, I think. And then you get this 5% correction from all-time highs again here, and where it bottomed out here on the 3rd of June. We didn't even finish the month yet. We haven't finished the month yet, and where are we at? We're at all-time highs. So here's what this means. This means that every time you see a 5 or 10% correction, the herd mentality is, what's the next step? All-time highs. So no matter how bleak or how grim or how obvious it looks that it shouldn't, it does. It ends up doing it. Whether you have an ongoing trade war, you have drones getting shot down out of the sky, you have war threats, it makes no difference. It keeps finding a way. So until that happens, which someday it will, then I wouldn't expect any sort of sustained sell-off. So now let's talk about next week, because that's just all speculation there and anything can change at any minute. I sure would like to see some sort of back test in this market, just a little bit, maybe taking us down to the 50 moving average or back to where the breakout is, down around the 288s, maybe even 285s. So unless you can get down in there and you can see some increased volume, I don't expect much. In fact, I won't expect much unless, the big highlight here, or the big talking point with the Fed, was they set this whole thing up for the all coveted rate cut, in July's meeting. So I would think the market doesn't do a whole lot of selling off, whole lot of sustained selling. Until then, maybe if there's a surprise or something comes up. But again, anything can happen at any time. What I say doesn't mean anything. What you say doesn't mean anything. It will do whatever the damn well it pleases to do. Now, we could still see some more highs, but I think through this week we're going to see more consolidated action, more chop, and we'll have to really pay attention to individual names as moving forward. So I'm going to go with the weekly winner of every week. I say weekly winner by meaning the stock I keep looking at and have hardly any trades on, and that is SHOP. This Investors Day that they had, this has to be one of the most bullish stocks in the world. Seriously. I mean, this thing was in the hundreds. I can't even, what was this? I just say this stuff to disgust myself, I think. Yeah, $130 at the beginning of the year. Topping out here, not topping out yet. Maybe it hasn't topped out yet. 326? Jeez whiz. What is this? What are they doing, man? I mean, this is just nuts. I always talk about doing this as a short. Now, I did take a couple of longs on this, but I'm sorry. I can't be patient with a long on a daily chart like that, because any tiny red bar comes out, I'm like, no, this is it. Tops in. I'm going to look like a fool for buying up here. But regardless of which way, if you're patient with this thing, you look for it. There's value to both sides of a stock like this. At some point, you'll see it roll over and plug in a good $10, $30 correction on this. But hell, it still would be up a lot if it did that. Just a stock that needs to be watched over and over again. Keep SHOP on the list. Now, a new name here I want to look at is this GBT. It might be a little bit of a chase right here where it is, considering this thing was $52.50 the other day. You got $10 over a 4-day span. But more importantly, it's the size of this daily candle down here on the bottom chart. Yes, it just slightly closes above the daily chart highs, which normally leads to more upward action like we saw in stuff like Lulu. I personally don't like for it to do that. I like for it to kind of base and build. I mean, look what happens the last time it breaks out through there. It actually sells off for a few days. You would, in the ideal world, in the perfect scenario for something like this, you would like 1 or 2 days of sideways action. Then you would like a break on this. You don't always get that, but watch this, especially for something that may offer you a dip value, a dip buy in some area. I kind of like to watch this one here and just start putting it on the list. Now, there was a couple of nicer moves here, or ones I'd like to start watching. Not start watching, continue to watch. Let's go take a look at this Wayfair. This was one of the biggest down days for Wayfair in a long time. You know, I say a long time, March. But if this thing can somehow sell off a little bit more, let's say we get down towards the 145s, maybe even 140s, because what I'm preparing here for is nibbling on some longs that have great daily chart setups where you have multi-time frame breakouts. The other is if you can get a little bit of down pressure in this market and somebody can be unfairly, I should say, or exaggerated downside moves, those make for some great dips, especially for some of these strong stocks that have been upward momentum to give you a nice little pullback. So if this thing can kind of flush down there a little bit more, get a little bit closer to that 140 base, let's say you wake up and it's down 5 or 6, I think this would be a pretty good play here for a nice little either 1-day trade or 2-day trade. So put this W up here on the list. And another one here, let's try some OLED. I think I'd like to short some OLED. I mean, here's another one. This thing was just, performance was junk. I mean, look at this thing, spent months and months going down. $80. $80, man. $80 freaking dollars in December. If you bought a bunch of these stocks at Christmas and you slipped into a coma and just woke up today, that's the best coma you could ever have. Here you are, just another high on this, or really getting tapped at resistance. I'd like to look at a spot like this again, just because these things are up. Like I've said the last couple of weeks, doesn't mean you short them just because they're up. You have to wait for the setup. The setup means a lot in these things. You just have to pick and choose your spots where you can control your risk. Maybe you get it wrong 2 or 3 times. Maybe you continue to just go over and over again and sound silly, but you just need to get it right once. You get it right once, something like this can deliver you a $10 to $20 per share gain. Yes, you can always buy these. Maybe it'll change maybe it'll have, I shouldn't say change, maybe it'll have a little bit more upward in it, but boy, oh boy, that thing's up there quite a bit too. So kind of watch that one. TWLO's another one here, really strong stock on a couple of day pullbacks. Same thing with ROKU. I'll pull up ROKU here in just a second. Again, if those two types flush out a little bit more and you begin the day with some heavy selling in those names, a big flush, to say a gap down, a little bit of panic, or just a little bit of profit taking and some back testing in some of these names, I would go to the stronger ones for buys. That's what I would do. If you get a -5, a -8 on something like this, again, I would look for the setup on that. Same thing here with ROKU, one I want to continue to keep up on the list. It's actually been selling off consistently. You take a look at this 2-day chart. It started right here from the pre-market here, 108, looked like 110. I was like, 110 is going to get done. 110 is not going to get done. And it's just gone straight. I mean, it's virtually, look at this, no bounce. No bounce whatsoever, practically from 108 down to this 102. So maybe you're talking 198s or something like that. You get a nice little rollover on that one. So there's a lot of stuff here that has potential, but you probably have to wait for the market to kind of play its hand here and there, I think, on Monday. Kind of give you the idea of where you want to go. I mean, it's up in the air. I know I'm just kind of talking around the bush about it, but the truth is you feel like now's the time to be short. You want to kind of be net short on some of this stuff. But that hasn't always been the case. Even though it's looked like that was the case, this market has more than 9 lives. It's got 90,000 lives. And every short seller is like walking under a ladder or something. I tell you, that's the way it is. But just watch those there. We'll kind of go looking at some big, let's say, 2 directions. If you get a big gap up, big old vert bars or something like that. Oh, I want to add Netflix. I might not pull up the chart, but Netflix. Let's look at Netflix here. Let me rewind that. Netflix here. Watch this thing if it gets through 370. But the same thing, it's already made a pretty good move here. But let's just talk about a couple of different scenarios. If you start to see a gap up, some verts, I'd be really hesitant to be buying into those breakouts. I am anyway on a regular day, but you got to be careful at some of these levels. Some of these stocks have made $30 to $40 a share moves. Now, if the stock you're looking at is multi-time frame breakout, has some room, has some good behavior, some tight consolidation, that's different. Don't worry about the market. But, if you're looking at this thing in a whole, kind of, if you think you get up there, maybe the value comes to the short side. We don't know. On the other hand, I think if you gap down, maybe there is some profit taking, you flush down a little bit, and some of these strong names like TWLO, like a Shop, like a TTD, like a WDay, these types of stocks, go with them as far as dip buys, because they'll most likely get defended, most likely get picked up on some of those lows. So anyway, I hope I did something. We never know. That's why you got to wake up and actually trade stocks. None of us can see the future. We can only just take a look here, formulate plans, formulate a plan if the market goes up or stocks go up, formulate a plan if it goes down, have a backup plan, have an A, B, and a C, and you'll do all right as a trader. As always, if you need help, feel free to reach out to me at thelincolnlist.com and try our trade room. Until next week, I wish you the very best. Trade well.